BMNR.
That's right, the big 4.3% price jump.
And the key question, of course, is this the reversal we've been waiting for?
Hmm.
The analysis did a great job identifying the technicals, the defense of that $30 support level.
And the huge volume, what was it, 52 million shares?
Exactly, and that potential double bottom pattern. It's all there, but it feels a little disconnected, doesn't it?
It does, and I think integrating the short-term technical triggers with the deep, long-term fundamental narrative is what will really elevate this piece.
Okay, let's get into that.
The main weakness is that the structure treats the technical setup, that bounce off $30, and the high-end fundamental targets as two completely separate ideas.
Right, like two parallel tracks that never actually meet.
Exactly. And you're missing the crucial opportunity to connect why smart money showed up so aggressively at that $30 floor.
So what's the suggestion? How do you bridge that gap?
My suggestion is to actively integrate that long-term fundamental catalyst, the whole alchemy of 5% goal in the Ethereum Treasury.
The Tom Lee narrative.
Yes. Make that the foundational reason for the technical defense. So, for an example, instead of just calling $30 a psychological support level,
You frame it as what?
you frame its defense as confirmation, as proof that the Ethereum Treasury narrative is building a real, tangible floor under the stock price. It validates the high institutional confidence we saw from those recent $70 offerings.
I see. So the bounce isn't just a chart pattern, it's fundamental validation in action.
That's it. It makes the entire argument so much more cohesive.
All right, that's a strong point. Now, the bullish case in the report is electric. The oversold bounce signal, the catalyst of Q4 earnings on November 21st.
The whole BMNR explodes energy is definitely palpable.
It really is. But, and this is a big but, you're arguing for a reversal after a 20% correction. Can we really afford to just ignore the immediate downside risks?
And that's the second critique. To enhance credibility, the report has to balance its high conviction with an honest and, robust assessment of the immediate risks.
So the weakness is that it's a bit too reliant on the bull case?
Yeah, exactly. It focuses so much on that $76.50 price target that it lacks a serious analysis of what could actually invalidate the whole thesis.
That kind of oversight can weaken the analysis for a sharp audience.
Right. So the suggestion is to make sure the immediate risks are clearly articulated right alongside that massive upside.
So give me a concrete example of how to do that.
Well, you could briefly explore the implications if the stock fails to break that immediate resistance at, say, $33.40.
Okay.
Or, and this is the really crucial part, what evidence would cause the reversal thesis to fail? You have to spell it out.
Like what happens if that critical $30 support does not hold?
Precisely. Or what if the update on the alchemy of 5% goal disappoints during that November 21st earnings report?
Defining the failure points makes the success case much more believable.
It shows you've done your homework on both sides.
So to wrap up, two really crucial takeaways here. First, connect the dots.
Right. Make that technical defense at $30 the physical proof of the Ethereum Treasury narrative. It just ties everything together.
And second, add that balanced assessment of the downside.
Acknowledge the risks. It doesn't weaken the argument at all. In fact, it makes your high conviction case bulletproof.
Excellent. So incorporate those key elements, and we're really looking forward to reviewing the next iteration.